After all the time I've been in Northern California so far, it's spots like this that I actually enjoy the most. Take a look around. We are surrounded by redwood trees, even though it's a residential neighborhood. So this is Madrone Avenue in Larkspur, California. If you like that smell when you put that fresh Christmas tree in your house every year for Christmas, imagine that smell times like 20 out here. That's what it smells like, because you're just surrounded by these giant redwood trees that just give off that wonderful smell. It's just so nice to be here. Talk about fresh air. We're gonna need that breath of fresh air, because we're gonna talk about what happens if you don't pay your student loan bills, because this is something that a lot of people are wondering and asking now that the payments are gonna resume on October 1st, and the government has like a little bit of a caveat to this, with you not being able to pay for a year and not having it being reported on your credit report. So let's kind of like run through this for people out there so they can fully understand what could be the consequences if they don't pay. I covered a while ago how there's different people out there, there's different groups that are flat out refusing to pay. They're just gonna default, they don't care about their credit, and they're just gonna say, you know, make me, essentially. So here's the deal. From October 1st of 2023 to September 30th of 2024, people have all that time to make no payments if they really need to. If you really can't afford to pay anything during this time period, then you can essentially make no payments, but you are doing yourself a disservice by doing that, because starting September 1st, which has already passed of 2023, you have now been starting to accrue interest again, because the interest accrual has been on pause for the past year and a half. Well, not anymore. So during this time frame from October 1st, 2023 through September 30th of 2024, if you don't make any payments, there are basically no financial consequences, okay? It means that your loan will not go into default, and your loans will not be considered delinquent, which in turn also means that you won't be reported to any of the credit reporting agencies for not making any payments. But before you think there's no consequences for missing a payment during this time frame, that is not the case. We already went over one of the consequences, which is that interest is going to continue to accrue. So basically, the longer you delay making payments from this point forward, the more you're going to end up owing when you finally do have to pay. And they give a good example in this story that probably fits a generic profile of the average student loan borrower. They say if you have 38 grand in student loan debt, a 4.5% interest rate, and you decide not to pay for the whole 12 months of this on-ramping time, when you start making payments again, none of your payment will go toward your principal balance of the $38,000. It will go towards the $1,700 in interest that you accrued during this time frame. So if your payments are $400 a month, like the average, student loan borrower, well, do the math, guys. Then it's going to take you 4 months, actually a little bit more than 4 months, to pay just the interest that you miss. In the meantime, you're going to be accruing more interest. So you can see how this ends up in this never-ending loop that you just can't get out of if you don't make the payments. But there's more consequences than just that. In fact, if you don't make any payments during this time frame, you will miss out on student loan forgiveness through income-driven repayment plans. Now, you really don't want to miss out on these income-driven repayment plans, because basically how this works, they'll give you a new payment based on what's deemed to be affordable based on your current income, okay? And then after paying off the loan, between 10 to 25 years of on-time payments, any remaining balance is supposedly supposed to be forgiven under Biden's new SAVE plan. And there are a few little quirks to this too, because apparently some people can qualify for $0 in monthly payments, essentially if their income is low enough. But that doesn't really make a lot of sense to me, because that means you went to college, you have student loan debt, and now you don't work, you have no job, and you're just poor, you're broke, you're homeless. Like, what was the point in going to college, right? Like, I don't know how many people are actually going to qualify under that, but whatever. So you decided, you know what, I don't care about any of this, Michael. I'm just not going to pay even after the 12 months is up. Well, what happens then? Well, we kind of already covered some of it, is that you're going to continue to accrue more interest on your loan balances. You'll also be disqualified from receiving the income-driven repayment plan, so that's out the door. So forget about ever having the debt forgiven for making on-time payments. After September 30th of 2024, once you go 90 days delinquent, then you're going to start being reported to the credit bureaus, and your credit score will start to drop after that. And after about 9 months of no payments, then your loan goes into default. So once you're in default, you went 9 months with making no additional payments, then the full amount of the loan balance that you owe becomes due immediately. Plus they charge you collection costs, which could be up to 24% of your balance. And the government can seize your tax refunds and garnish your wages and federal benefits like Social Security. So once you've defaulted, you're no longer eligible to participate in any of the forgiveness plans. No more Mr. Nice Guy, essentially. And actually, some people have done the math on this, and people that say, well, I'm just not going to pay, and they can go ahead and garnish my wages, that can actually end up costing you more than if you were to actually sign up for one of these income-driven repayment plans, because if they garnish your wages, they'll probably take about 15% of your gross paycheck. But if you do one of the income-driven plans, you might be able to get away with just paying as little as 5% of your paycheck per month. So that's a better savings. It's a better deal for you. It means more money in your pocket each month. So I don't know why anybody wouldn't do that. So I think there's a little bit of confusion about this 12-month gap period that's going to be starting on October 1st about paying the loans. It doesn't mean that you don't have to pay just because you're not going to be reported to the credit agencies and there's no real consequences. It's more designed to softly guide people as like an on-ramp back to paying the bill if you haven't been paying them already. So it's not so you can just have another year of making no payments. It's just to make it a little bit easier to begin making the payments. So if you miss a couple, you're not going to be, going into default and having your credit score tank. But if you had the financial means to make the payments, you should do it, because it's going to be to your benefit for doing so. And it can go much further than that, guys. If you decide to not pay and you decide, yeah, I'm just going to default and see what happens, not only can they garnish your wages, but it can go a lot further than that. They can actually start repossessing and putting liens on any assets you might have. If you have a car, they can put a lien on your car. You own a house, they can put a lien on that. There's a lot of things that can happen that are going to be major consequences for not making these payments, and it really doesn't seem worth it if you ask me. It's just like asking for trouble by not paying. And you could kind of do the math on this, like I'm trying to help you think this through and be smart. Like if you end up actually being able to get your loan forgiven from anywhere between 10 to 25 years for making payments, if you can figure out how long you need to pay until the loan is forgiven and make the minimum payments during that entire time, if that number ends up being less than the amount you owe, then it might actually be worth it to try to just pay the bare minimum in this case and get the debt forgiven when you're eligible for that in the future, rather than sit there and let the government take 15% of your wages right off the top and potentially, foreclose on your house or put a lien against your car or whatever. Who wants to deal with that? So I think that people really need to think this through if they're planning on doing a strategic default, essentially, because there are a lot of people out there who are saying they're going to do this. So trying to give you guys a fair heads up and kind of like the warnings and what the consequences of doing this might be. And here's where it can get really messed up. If you decide to go down this road of not paying, right? Well, not only are they going to garnish your wages, but you won't be eligible for any further student or government aid ever again in the future. So forget about any more free handouts. Now this house appears to be the only place for sale in the entire neighborhood. They're asking almost $2.7 million, and it's a new listing, so it's hard to tell if that's the right price or not, but they last bought it in March of 2005 for 1.6. Prior to that, somebody bought it for $730,000. So it's just crazy how much values have gone up here. And look at this property tax bill. Since they bought it in 2005, the property tax bill has increased pretty substantially from back in 2008 of almost $20,000 a year to now it's almost $28,000 a year. So even though they have Proposition 13 here, the taxes do still go up. not only won't you be eligible for any future handouts or federal aid from the government ever again, but also your loan holder may end up suing you, and if you ignore the court date for that lawsuit, then you can end up getting yourself arrested and going to jail for missing the court date. So there's like all these different, spiraling down effects that can really happen to you just from missing a student loan payments, guys, and it just doesn't seem to be worth it. So you can do whatever you want, but I'm just giving you the heads up of what the reality is if you decide to go down this path. And I mean, if it were me, if I had student loan debt, I mean, I don't like owing anybody any money, and I would figure out a way to just get it paid off as soon as possible, unless, like I said, you do the math and you can get it forgiven in the future for less than it would cost you to pay it off now by working harder. Now, here's something interesting that pertains to the resumption of the student loan payments. Goldman Sachs recently came out and said that, well, we think we're going to see a slowdown in GDP for this country over the next couple of quarters, but by the first quarter of next year, it's all going to rebound. So everything's going to come back. They say we expect to see the slowdown in GDP to be shallow and short-lived. Their reason that they think this is because once the first quarter of next year comes, then income growth is going to accelerate, and we're going to have still solid job growth numbers, and we're going to have rising real wages. Well, I just covered for you guys a couple of weeks ago that has been confirmed that people are literally making less money today than they were 2 years ago when you factor in inflation. So forget about the nominal value of your paycheck. It doesn't really matter what that is. It matters how much that paycheck can actually buy you in this economy. And the fact of the matter is, the inflation is rising faster than those wages are. So I don't know how Goldman Sachs thinks that by, 4 more months from now or whatever it is, that's going to magically turn around. That sounds like kind of insane, really. And then it's like having these student loan payments resume being a drag on the economy. Like, you think? Don't you think that's going to affect things a little bit? We already know that 80% of the GDP in the US is based on consumer spending, guys, and the average student loan payment is $400 per month. So that's $400 per month. That's not going to be spent at the restaurant, the bar, the grocery store, traveling, nightlife, anything. It's going to be going towards that for at least the responsible people that decide to pay, and they're not the ones saying, I'm just not going to pay, and see how it goes. There's a new player in all of this that's going to drag things down even further, or potentially could, and that is the strike from the United Auto Workers right now. And now everybody's saying that they don't think that the Fed is going to raise rates again. Everything's just going to rebound. And it's nice to feel optimistic and think that that's how this is all going to play out, but I just don't see how it's possible, because I feel like we're in this situation where things have been too good for too long, right? Things have been very easy. There's been a lot of unearned wealth happen in the economy in terms of, people's portfolios going up in the stock market, equity going up in the real estate market, and that can only go on for so long. That type of situation just doesn't last forever. So one thing I'm kind of curious about is like what everybody's mentality is about all of this, because you have people like me, like I make these videos and I genuinely think that we already have hit the recession and things just haven't completely fallen apart yet because of all these band-aids that they put on during the pandemic. But as they slowly start to fall away, the savings rate is going down, the student loan payments coming back, and just the myriad of other issues that come up, it just seems like a matter of time before the whole thing's going to have to blow up. I just don't see any other way, guys. Like, yeah, the Fed can jump in and print more money. That's the other way out of this. But then inflation is just going to go through the roof. So that's not really a solution either. But I have to wonder at this point if people that are putting out news stories and things that are saying that the economy is going to be fine, it's just going to be this soft landing and nothing's really going to happen after all that we've been through with all the stimulus and all of the hiatuses on payments and everything, that there's just going to be zero consequences from all of that. I just don't buy it. I feel like when people write that kind of stuff, they're not really being optimistic. They're either being naive or they're just flat out lying and trying to convince people that that's how it's going to go. Unless I'm just missing something here, because if I am, let me know, because I don't see it. I just want to see what people on the other side of this are thinking of how this can all go well, because the only way I see it going well is if the economy continues to grow, people continue to spend, and wage growth actually does go up. That needs to be a main factor of this equation. Like, you need to have real wages rising higher than inflation in order for this whole thing to keep going. And right now we know for a fact that that is not happening. And Goldman Sachs is saying by the beginning of next year, that's all going to be fixed and all is going to be right in the world. I don't think so, guys. And to me, we're just looking at all these different signals that are just like a sign of the times right now. You know, I just saw another thing today talking about how the office vacancy rate throughout the entire country is higher now than it was in 2008. And we all know what happened in 2008. We all know that we had the great financial crisis, we had the stock market crash, we had real estate market crash, there was 10% unemployment, people lost jobs, people lost homes. It was painful. Well, that's when we saw office vacancies this high. Now, I understand there are new dynamics at work now, because fast forward 15 years later, technology has progressed pretty tremendously. There's remote work now that, you know, was still probably in its infancy back then. Sure, people were remote workers in 2008, but nothing like today, where almost any office job can be remote work now. But right now, across the country, the average vacancy rate in commercial workspaces is 16.4% in the second quarter of 2023. And this is a problem that just is continuing to get worse quarter after quarter. So the office vacancy rate is continuing to climb right now, but somehow the economy is strong and resilient. That sounds like a direct contradiction to me. So I'm just looking at things like this that don't add up. These things that we're hearing don't tell the picture of a healthy economy. You know, and the only thing that people that say that things are going well have to stand on is the fact that, oh, well, we still have the jobs reports doing well. We have inflation going down, except can't stand on that one anymore, because now past 2 months inflation is going back up. And then they would say unemployment is still low, consumer spending is still up. To me, guys, none of that is really solid evidence. Like, consumer spending is up mainly because it has to be, and we covered this already a couple weeks ago as well. You know, people are spending more than ever now on rent, insurance, food, gas. Those things are actually what people are spending the most on right now, and the highest contributors to consumer spending. So really right now we're neck and neck with the office vacancies like we were back in 2008. It was 16.3% back then. Now it just hit 16.4%. So it's going to be interesting to see if the vacancies continue to climb, because what that means is people are going out of business, guys. And guess what? This has a domino effect on everything. If people are going out of business, that means people aren't spending money at those businesses. It means that those people are going to lose their jobs, which creates more unemployment. It means that downtown centers where these office buildings are starting to become vacant, those places are going to become the next jingle mail for the bank, where the companies that own them are going to be sending the keys back to the bank and saying, yeah, we don't want it anymore. We're just not going to pay anymore, like we're already seeing happen with many other people. And guess what? Now that all this commercial debt needs to be refinanced within the next 3 years, all these people that own these office buildings are just giving them back, guys. Because of all these vacancies continuing to go up, it means that they don't want them anymore because they're not worth what they paid for them. In fact, a lot of times they're worth half of what they paid for them 10 years ago. That's how bad this situation is. And the more people give these buildings back to the bank, then the worse this situation is going to get, because it means the banks are going to lend less money to people, and it's just going to have a downward pressure on the economy. But somehow that's supposed to be good news from people. I just don't get it. Show me the sunny side of that. Let me know in the comments. But once again, for people who say that I'm always being negative, I look at all this as good news, because to me, the good news is things will get worse, but that will push us into a situation where it can finally get better. And that's the bright side of it, if you ask me. So if you enjoyed this video, make sure you subscribe to the channel. And if you don't want to wait for my next one to come out, check out this one on the screen right over here, and I'll see you in the next one.